It's now time for the Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters out there. It is Wonderful Wednesday, and thanks so much for joining me. I'm Steve Rhodes, host of the Trader's Edge, and folks, there is no place I'd rather be. All you folks waking up, or maybe you've been up for a while over on the West Coast in Spokane, thanks so much for listening. And you too as well when you're up in New Hampshire. I know this show is replayed at the 12 noon time. And a special thank you to everybody that joined us along the way on our Go Along America tour. Tom and I finished that off last night in Tampa. Just a fabulous time, a fabulous event. You know, here's how you mark a great event, at least in my mind. Here's how you mark a great event. And you see, money, folks, money's something that I can make it in a moment's time. Time, though, you know, time is more valuable than money. And how it's a great event is folks didn't want to leave as soon as we were done. You know, and they were talking 6:30 to 9:30 at night after a long day of hard work, you know, and sitting there in a room after listening to us for 3 hours, if you will. And when we finished the session, you know, I don't know that we really left until maybe pretty close to 10 o'clock. And it was absolutely a great event. And, you know, looking forward to maybe just a little bit of both Tom and I expend a ton of energy in there. And I'm going to try to find some way. You know, it's very difficult when you're doing a radio show. You're on a clock, if you will. And you know, we've got listeners. They want to know what's going on with the markets. And, you know, speaking of the markets, you've got a bounce going on here. Nothing more right now than a little bounce. The Dow Futures up maybe about 55 points. S&P up about 6. King dollar off only 8 ticks right now. But, you know, it's very difficult to try to take what it is that we do on the road. I can, you know, spend time with you, technical trading, but this is only really this is the small part of it, in my opinion. It only represents 20% or less of what you really need in order to be able to be a great money manager. And that's really what the entire focus was during the tour, was being able to get you to switch from understanding that what you're really in is a business. You are not a trader. You are not an investor. That's just the tool that we use. It is really all about money management. And folks, it is such a subtle change, but it is one of those changes that will absolutely set you free in the words that you use and the stories that you tell yourself about what it is that you're doing. More importantly, your ability to be able to become a master, to be able to expect that you're going to have outcomes, not failures, because that's all trading is. That's all that business is. All we're trying to do is always link the known to the unknown. We absolutely did it last night. And again, I just want to say thank you to each and every one of you that attended our events as we traveled the country. And I look forward to doing it again. I'm going to get a chance to come out and meet one-on-one for played full out for 2 full days, you know, at my Money Masters courses, my Master Trader Series courses, you know, which will pale in comparison to what it is that, you know, we did on this tour. So, and that's going to be, I'm going to be in Denver, Tampa, and Boston. I'm going to be in Denver on March 23rd and 24th. In Tampa, April 13th and 14th. Boston, April 27th and 28th. We haven't done this before. We're making this a Friday, Saturday session just so that it's easier for you to be able to plan, you know, your week, so you don't have to take 2 full days off from work or whatever activities, and it's just a Saturday, which, you know, is an important day. We don't want to make it 2 full days on the weekend, so we wanted to try this out. Go to the homepage at tfnn.com and check that out. Already Wednesday, so we are halfway through our week. And so don't forget the Tiger Dollar promotion that we've got out there as well. And so, as I say, you know, one of the, I guess if I were to, you know, try to sum up, and it's pretty hard to sum it up in one sentence or one word, you know, even one paragraph, what I took from, I took so many different things from the Go Along America tour. There were many times where there were just simply light bulbs that went off. And after each event, you know, Tom and I would get together. We would just kind of speak about our own observations, what we saw, how we could improve things. Because, you know, in my life, I'm always trying to find a way to make things better. That is my primary focus, you know, from the moment I go to sleep to the moment I wake. All throughout the day, it's always about how can I make things better. And, you know, we talk about fears, false evidence appearing real. Didn't actually even speak about that too much during the tour. But here's the deepest fear, folks. Our deepest fear is not that we're inadequate. It is not that we're going to be a failure. Our deepest fear is not that we're inadequate. Our deepest fear, folks, is that we are powerful beyond all measure. And that's certainly one of the things that we took a look at. We talk about some exercise that we do just simply to understand one's potential. And your biggest fear, folks, is the fear of success. I want you to be able to get over that fear. I want you to be able to really learn how to be a money manager. You're at the right spot. Our call number is 877-927-6648. And so let's, and you can watch us on TigerTV. If you're not, please go over to the homepage at tfnn.com. Click on the button there for TigerTV, or all the way over on the right-hand side, you'll be able to bookmark the link so that we're just one button away from being on your mobile device, whether it's an iPhone, an iPad, could be an iPad HD or whatever they're going to unveil today out in San Francisco. I believe that's probably where they're having the event out there. Maybe that's at the Javits Center or something like that. And so, you know, or it could be on your Android device. Why? Because you're going to take a look at my screen here right now. You're going to be taking a look at the ES Mini. That is the S&P futures contract. And the low that was put in on the ES Mini took place yesterday at about 4:15 in the afternoon. Got down to a low of 1341. Now what the ES Mini is trying to do is just simply complete a small A to B equals C to up. You can see after it made that low there at 4:15, it went from the 1341 area, made its B point. It did that, looks like right around the 22:30. So let me see, 10:30 in the evening. Probably as Tom and I were sipping on a beer, if you will, and the S&P futures got up to a high of 1347. And then what's it do, folks? You know, just if you are in the area, if you're in Clearwater, please stop by and see us, and make sure you come up to Suite 618. Important to understand that suite number. Why? If you take a look at just simply the leg up that we're just talking about, that A to B leg, and you take a look at the C retracement, the exact 618 would be 1343.29. You know we're not about being exact here. We're just simply going to get rid of those cents. What does the ES Mini come down to at 12:30 in the morning? Comes down to a low of 1343.75, right? Get rid of the cents. 1343 was the 618. 1343 was what it hit. It was just simply doing a normal retracement. It's just a breathing pattern, if you will. And that breathing pattern then took the A to B equals C to D right up into the 1349 area. And we haven't gotten completely up there, 1349.75, but we have hit it, right? If we get rid of those cents in life, you know what you probably do. How many of you, you know, when you have pennies in your pocket and quarters and change, you can't wait to get home and you throw it in the drawer, if you will. You want to save it. You want to spend those pennies, if you will. But you just simply, for this game here, this business, right? I'm going to make a change. We're no longer going to call this the money game. We're going to call this the money business, because that's really what the entire Go Long America tour was really all about, was being able to make that change from being a trader to truly this, what you are in, folks, is you are in the money business. And you want to understand, and you know, the number one reason why people fail, one, because they grapple with actually being successful, if you will. But the second reason, folks, is that, you know, you want to make sure that you treat this as a business. You want to run this as a business. And so I'm going to teach you how to do that each and every day. So you've made your A to B equals C to D. You've got the S&P futures. This is a 30-minute contract that we're looking at, trading out right now at 1347.25. Let's go take a look at the dailies on these futures contracts. And you know, what I've got up here is the daily ES Mini, so we'll pull that up, and you can see that we had that ascending wedge. And, you know, you've heard me talk about that the likely outcome of an ascending wedge is that it's going to resolve itself to the downside. It traveled inside this wedge, you know, going all the way back into the December 19th area, all the way up until it made the highs when it was testing that 1373.50 area. That was doing nothing more than coming back into May 2nd. You know, it tested that area. We hung out there for just a little bit, 4 or 5 trading sessions, but that wedge was broken, and broken with conviction to the downside. Yesterday was conviction. If you take a look at Monday's action, you broke just below it, but really no conviction. You are now trading outside of that May 2nd swing point. May 2nd swing point, folks, that's going to be important to watch. You know, if you're bullish, you want to see it get back inside there, ASAP. If you are bearish, you know, just a counter trend bounce to test it, reject that area, and continue the retracement. And quite frankly, folks, if you're bullish, you actually want to see a little bit deeper retracement than this. One day is not going to work things off trading out at 1347 right now. Let's take a look at some of the other futures contracts that are out there. Let's go take a look at the NQ, the NASDAQ futures. NASDAQ futures strong as can be. Let me get rid of this pattern here that we had. This was a failure. So let me keep this up here, right? Here we've got a failure of the NASDAQ futures. This is a butterfly pattern, and you want to understand those patterns, folks, because you can learn as much from a failed pattern, maybe even more, than you can from a pattern that's going to succeed. It's also helpful from the money management standpoint, and you take a look at this. Now, when you fail here at the 1.618 on this, where would you then go to? Well, I don't know if I've got it set up here on this ruler. Oh, boy, that didn't look right. Let me see. I must have grabbed the wrong tool. Let me go back to my Fibonacci expansion contraction tool, and I don't know if I have it set up here. Let's see. I do not. I'm going to have to go in there and do that. I'll do that during the break because we're just about to go to it in a couple seconds. But most importantly, notice how the NASDAQ futures, which have been so strong, have also broken this uptrend, folks. 877-927-6648. So great to be here with you this morning. I hope you're having a great Wednesday. You absolutely should be. We'll be right back.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of The Money Game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. 877-927-6648. And we are cruising into a full moon Thursday. In fact, the full moon comes in at 4:41 a.m. That's going to be tomorrow morning, 4:41 a.m. And that's Eastern Standard Time, folks. So if you're up, you might want to take a look at it. You've got the full moon coming, and we know that these moons, many times, they've got an impact on the market, so you want to be paying attention to that. And if we go take a spin around the world, you've got the DAX is up 21 points right now. FTSE up 21 points as well. Over in Asia, you had the Nikkei down 61. You had the Shanghai off 16 points. The Hang Seng down 178 points. And what I do have up on my screen here right now is the DAX. That is the German index, folks. And you want to pay attention to that. You'll see a red line. Let me get rid of some of the other stuff that is up here just so that we clean this up, make it a little bit easier for you to take a look at on Tiger TV. And what we're taking a look at here, what I've got identified, which I think is important for you to identify in any of the charts that you're trading, happens to be that December 3rd area. December 3rd is where our market's gapped up. We'll go take a look at our ETFs, maybe take a look at some of the sectors inside the S&P, if you will. But this February 3rd date is where the market's gapped up. You know, it's not really what you would consider a normal, in fact, it's not a, if you're taking a look at this chart, you would not consider this to be a swing point. But because I know it was a significant event, you know, and you know that it was a significant event, if you take a look at the other charts out there, you want to be able to mark it. If you take a look at where, because that really marked an area of support. So if you take a look at the DAX and where it closed yesterday, the bottom of the February 3rd area on the DAX, 66.35. Where did the DAX close yesterday? It closed at 66.33. So really right on that line, right? We're going to go ahead and give it 2 points, if you will. Now, closed at the lower end of the session on the DAX. Maybe it was really right at the bottom. In fact, it was right at the bottom of the session. So you've got a long-range bar. You're coming down hard. You can see this morning, even though it's up 19 points right now, it is struggling. If you're bullish, you'd like to see it close back inside that range. You know, you're going to be able, the DAX will close at 11:30. I'll be off the air, but who will be on the air? Mr. Basil Chapman. You know, it is wonderful Wednesday. You've got Basil in the driver's seat from 11 to 12, then Larry Pesavento from 12 to 1. I don't know if Larry is in Philadelphia, Hong Kong, but he's somewhere. Where in the world is Larry? And he'll be on from 12 to 1. Then David White, hopefully he is, I know he had been under the weather. I don't know how he's feeling, but hopefully he's okay, and he'll be the warm-up band for the Tom O'Brien Show. 3 to 4, and then you've got Tom from 4 to 6. But at 11:30, you'll want to pay attention to where did the DAX close. Why? Because it'll give you a clue, if you will, because all these markets are linked together, give you kind of a clue as to what's going to go on inside our markets. If we do take a look at the FTSE here real quick, we'll take a look at the FTSE. You can see the FTSE really doing the same type of setup. Let's go take a look at the FTSE and find February 3rd. What you're going to see is the FTSE is really right at it, the February 3rd area. Let me just get rid of this. We'll go ahead and draw a line so that you can follow this on Tiger TV. And you can see that the FTSE is trading. The low of February 3rd happens to be 57.84. You closed below that yesterday. You're trading at 57.84 right now, almost 57.85. So in the UK, they're rejecting that area. If you reject that area, even you expect to come back up and test that, folks. It says that what you are seeking or what the markets are seeking are lower prices. If we go take a look at our indexes out here, you know, you had the Dow finish down 203 yesterday. S&P's off 21 out at 1343. And if we take a look at our February 3rd area, inside the S&P, you can see that that actually held. Now, in the DAX and in the FTSE, we were looking at the low. If you take a look at the February 3rd high inside the S&P, you're looking at 1345. Where did you close yesterday? At 1343. You're going to open up above that today, February 3rd, folks, is very important. Now, I would expect that February 3rd area to be tested, and probably just slightly below it. What you have going down there is going all the way back to the highs in October of 2007. If you just simply drew a trend line from the highs there to the May 2nd highs, let that go ahead and cross through there. You know, we came up above that on which date? That's right. February 3rd is when you broke above that, you know, with a little conviction behind it. And now you would expect to come all the way back down and test that area, either the low or maybe the bottom of that trend line. You break that trend line, folks, in the S&P, and it says that you've got a deeper correction. There are always identifiers out there that help you to understand where the market is going. You know, you can go over to the Dow. The Dow had those double doji candles, if you will, that we identified. That area has not been taken out. And those double doji candles, very important, because if you go back to May of 2011 or you go back to 1987, folks, you will see double dojis. Those double dojis, those are for Rick in British Columbia. When we get right back, folks, we'll see how this market is going to pop, whether it's going to drop. 877-927-6648. We'll be right back.
In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices along with commodity and forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets you once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of TFNN.com. Nadex, a better way to trade.
Hi folks, this is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com under newsletter. Hit the Market Insight tab for your 2-week free test drive right here, right now.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. You got the Dow up 16 points. S&P's up 3. Composite leading the charge. No surprise there, up 13 points, led by none other than Apple. You've got Apple trading up $4.60 right now, out at $5.35. We're going to round that. You got Wynn Resorts. They're trading up $3 out at $122. Netflix up $3.60. They're up at $1.10. Amazon up $2.40. Lululemon on the rise. Baidu. Any of those sound like NASDAQ stocks out there? I think they are all pretty much out there. You've got the small caps up 3 points, up 0.43%, kind of neck and neck, if you will, with the composite. What I've got up on my screen here right now, folks, is the small cap, the Russell 2000. What you're seeing in the light blue area, folks, you are seeing a tiger butterfly, a 1.618 butterfly. Those are the ones you really want to be able to find, because those, folks, are where you've got some major stretching going on. And major stretching, because when those patterns work, folks, they usually explode. Now, did this one explode? It just simply moved sideways with the market, but the Russell 2000 was the first one to give us the signs of weakness out there. It was a great pattern to trade. When we began the Go Long America tour, we provided that trade to everybody out in San Francisco, in Spokane, in Denver as well, and I think might have got folks in it in Boston on Saturday. And what we were taking a look at, you've heard the phrase, the trend is your friend. Well, how about trend lines? It's important to understand trend lines. If we take a look at the trend line inside the Russell 2000, and you would just go back to that October 4th area, that huge bullish engulfing day that we had out there. That's why you want to understand these candle patterns. And if you just simply start from the lows of the Russell 2000, you're looking at the 601.71 area. Your next touch point is going to be that November 25th, that Friday after Thanksgiving. And just simply, let those be your two touch points. And look what the Russell 2000 does yesterday. And we're talking about the blue line that we've got up here on the screen. The Russell 2000 comes right down there, stops right there. Why do you want to be paying attention to this? Because, folks, if that area, or when that area gets broken, then where's it going to go? Well, it doesn't have too much further to come down and test that October 27th area. We know that's where these markets want to move to. It would be nice from both a bullish and a bearish standpoint to come down there, see that test. Now, when you take a look at these patterns here, you just simply, and this pattern I'm talking about is a butterfly pattern, and your normal question would be, well, how about from a sacred geometry standpoint, where should those trade to? Well, that's pretty easy. You just take your retracement ruler, go all the way from your A to your D point, okay? And we know that our D point here was extended, so we go from our low to our high. The 0.382 area, that is going to be the first area where you will see this market stop off, where you'll let some folks off of the elevator. And you'll also see at 0.382, in this case here, looks like it's right about 769. Here's the interesting thing. What's the top of the October 27th area? If you can maybe even see it in my screen, 769. So just simply a normal 0.382 retracement area happens to line up with October 27th. That 382 area gets broken, folks. What it wants to do is get all the way down into this 730 mark. Is it going to do it overnight? Absolutely not. These markets, they breathe. You want to understand trend lines. You want to understand butterfly patterns, swing points, and you are at the right place. Let's go take a look at King Dollar, see what King Dollar is doing out there. King Dollar is trading out at What is the number there? It looks like 79.96. That makes King Dollar up 3 ticks right now. King Dollar is on the move. King Dollar continues this movement, and there's nothing really in its way. It's doing a 100% move of a move. That means it's going back and it's trading inside the February 16th swing point. The high on that swing point, 80.24. That's the area that it wants to attack. If it gets above that, folks, if it gets above here, doesn't really have any more resistance on the way up. It should be able to catapult itself right up into that 82.04 area. And so, you kind of line these things up. You got a full moon Thursday or early this morning coming in, and we know that those moons, they've got a lot of emotion, and motion is nothing more than progress. So we want to be paying attention to that. King Dollar on the move. Well, that must mean that Queen Euro is on the move as well, but to the downside. So if we go take a look at Queen Euro out there, and we just simply go to the last swing point, that is February 16th. The low there on Queen Euro, 1.297, all the way up to the high that was made when you did that on February 29th. It got up to 1.33 and a little bit of change. And you can see that what Queen Euro did yesterday was it came crushing through that 0.618 area. It didn't want to stop and see us here at TFNN. It said, sayonara, I'm going up to the next floor level. That next floor being the 0.786. Well, because of the way that it came crushing through here, because you are trading inside this swing point from February 16th, what this tells me is it wants to go back all the way down and test that bottom. It wants to test that 1.29733. Folks, that will put some pressure on the markets if that is the outcome in the currency area. If we go take a look at the other currencies out there, we'll take a quick stop over in England. We'll go over and take a look at that great British pound. And it is pounding absolutely. And what is it doing? It's pounding its way down inside its trading range down to February 14th. It's trading inside that candle. You came through with a nice wide range bar yesterday. The low is 1.5644 as far as where it wants to trade to. That is in the February 14th area. That area gets broken, folks. Where's it going next? Excellent question. All we have to do is take our Fibonacci rule, go from the bottom that was put in on January 13th all the way up to that shooting star that was put in on February 29th, and you will see the euro. And what you also, let me just get rid of some of these lines that are out here. Let's get rid of this larger one, make it a little bit easier for you to see. Let's go ahead and get rid of this one here. Let's go ahead and get rid of this one here. Oops, that wasn't the one we wanted to get rid of. So now, let's go back. Let's go ahead and take a look at from the lows. We'll take a look at our retracement from the lows all the way up to that shooting star on February 29th. And you'll see right now that what the pound is doing, it's trading at that 0.382 area. Look at this area here of consolidation, of congestion. This area here gets broken out. Only will come down and test the lows here. I think this time down, it'll come all the way back into the 155 area. And you'll see you've got a little gap out here. So it would make sense. That would be the next area of support. You're looking at 1.55. That is inside the great British pound. Let's go take a look at gold, see what gold is doing out there. You've got gold trading up $2.36, $2 at 16.74, if you will. And gold is on its way down into the 16.25 level. You can see that it came crushing through the 0.382 area yesterday, trading below that. And when I'm going with this, folks, I'm going all the way back to December the 29th, a low that was put in there at 15.23, all the way up to the highs that were put in on February 28th. What happened February 29th? You're talking the mother of all bearish engulfing candles, because it engulfed the entire month. Went all the way back to January 26th. We're talking January 26th all the way to February 29th. Let me tell you, folks, that is a sign. That is an absolute sign of lower prices to come. So how would you correlate that to King Dollar? Well, if you've got lower prices coming in the way of gold, that means you've got higher prices coming in the way of King Dollar. Well, what's going on in the silver marketplace? Well, hi-ho silver. We go take a look at that marketplace. We can take a look at silver. Silver trading now inside. Now, here's the interesting thing when you take a look at silver. Look what silver did yesterday is it actually made a move of a move. We talk about making a 100% move of a move that was coming down into the February 16th area. What you can also see, it was a 0.618 retracement off of a swing point coming back here in the January time frame. If we come down all the way, let's go take a look. Let's get rid of these. Get rid of some of these swing point math, and let's come all the way down here from the lows that were put in on silver, and the lows there coming in the December 29th area, low on silver being 26.14, all the way up to the high that was made on February the 29th as well. You're trading below that 0.382 area. That says silver wants to get into the $30.51 area. You're trading out right now at 32.92. Right now you've got the Dow is up 14. Let's go take a look at some of the what's moving and what's grooving, if you will. How about Pandora? Any of you guys, use Pandora? In fact, I think I remember David White talking about some of these new issues that were coming out. Ticker symbol on that one being P. Let's pull that up on the screen. Why was he talking about it? Because he was saying, well, what was the real competitive advantage that Pandora had? Well, apparently David was right, because they didn't have much of a competitive advantage. You've got that gap down, trading out at 11.26 right now. That is off 21%. That's a stinger, if you will. They released some numbers yesterday, and, worse than expected. Take a look at Pandora. This thing opened, traded up to a high on the day that it came out, June 15th, got up to $26. How would you like to be the guy that actually bought Pandora at $26? Trading out at $11 right now. You've got some volume today because we are only 14 minutes into the trading session, and you've already traded 8 million shares. So where is this thing going to go? I don't know, folks. It's going down to the bottom of the range, that's for sure. The bottom of the range so far, December 12th, that only has 7.6 million shares. The low there, $9. To a high of $10. Just don't get in the way of this one here. That is Pandora. You talk about moving and grooving. That is moving and grooving to the downside. What else is going on to the downside? You got Deckers, D-E-C-K. That is the ticker symbol there. That is trading off about, $2.50. That's down about 3% or so. Let's see, do I have anything out here? Nothing that shows me why it is trading down. Let's go see what it's trading into, if there's any volume or anything to speak of. You do have it trading, below this consolidation area. So that is saying, hey, you've got some slight problems. The last swing point here, they could possibly hold this up, comes all the way back. Looks like January 24th, the low out there, 71.18. The high on that swing point is 73.17. You're trading inside there. That's got 1.5 million shares, 1.4 million shares. So far, what you have done today, just the first 15 minutes of trading, 497,000 shares. So you've got some juice. You've got some volume coming out of this, and this has been a long-term consolidation. This consolidation area, folks, goes all the way back to 2010, November 2010. I believe that Deckers has been one of the IBD leaders out there. When you start seeing the leaders fall by the wayside, folks, that sends out a signal to you. Well, talk about leaders. Let's go take a look at Priceline. You got Priceline leading the charge up here today, PCLN. That's doing nothing more than just continue to trade out at these highs. Be careful if you are in Priceline. Why? Because you are creating this huge island out here. And you can go take a look at a number of stocks, ETFs that are out there, all that are forming these islands. And what you want to see is just simply a normal retracement to close up this gap. Because when you jump this area here, folks, if you do create an island, that means you're going to gap down somewhere below the 626 area. That would be a very, very bearish. In fact, I'm just trying to pull this back here, see if I see any other island reversal patterns out here on Priceline. So I see one out here. So let's go take a look at the island reversal pattern that I see. And this one here, folks, what happens, patterns repeat themselves time and time again. That's why we like to be able to take a look at retracement expansion patterns between swing points. It's why we like the Gartley and the butterfly patterns. It's why we like the Chapman wave, because you've got patterns that are out there. Well, one of the patterns, you take a look at a stock, see what it's done in the past, and take a look at this island that was forming out here inside Priceline. It was doing that during the time frame of July 2008. And here's an island because you take a look at the July 30th area. The high was 109.94. Opens up the next session. The low on that, $111. You can see you've got a gap up, if you will, an open window. Got to be careful about those open windows. Why? Because those windows will close eventually. Well, in this case here, not only did it close, it pushed its way down and create an open window to the bottom side, if you will. Gap down on August the 6th, created this island. And what did Priceline do? Went from that, left those folks, those passengers out there in the $111, $113 area, and then Priceline didn't stop until it got down to $42. $42, folks. So I'm not prognosticating that that's what's going to happen. But if you don't pay attention to this area here, and you do not want to see this resolve itself the same way that it did the last time around, and if it does, then you want to be able to get out of Dodge if you are in this stock. That is on Priceline. Let's go take a look at Apple. See what Apple is doing out there. We know they've got an announcement sometime later on today, and we'll see what that's going to do to the stock. You can see Apple, the only signal that it gave us was the bearish engulfing candle. It was doing that here, as we mentioned this yesterday, on March the 5th, so 2 trading sessions ago. That is on Apple. You're trading inside there right now. And if we just simply come down to an intraday time period, let's go take a look at the 5-minute charts, see what we've got out here on Apple. Really not much. It gapped up and traded a little bit lower. Looks like it wants to close this window that it created this morning. This is on the 5-minute chart. That would say Apple wants to get down into the 530 area, trading out at 533. So it can do that in an absolute heartbeat. If we go take a look at Amazon, let's pull Amazon up on our charts here. AMZN, see what we're doing with Amazon. Amazon, folks, yesterday actually was up. So in a day when we had the markets off, Amazon was up. I was actually paying attention to this the entire trading session. Amazon absolutely got hammered out there a while back, but Amazon is starting to show some strength. The first sign of strength, if you will, may have come in on February 1st, but there's some other candle formations out here that make it an intriguing stock to watch. It's called a hammer candle. 877-927-6648.
Take a hands-on approach to managing your investments. And whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you seek to maximize your returns. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio. Therefore, we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider, David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650, but you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
And very happy.
Well, I appreciate it. Now, Did you sell us jewelry or did you buy coins off us?
Yeah, I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
Welcome back, folks. 877-927-6648. My batteries, they're recharging. So is the market. You got the Dow up 23 points right now. S&P's up about 3. Small caps up 3. Composite up 14. Apple up $3.60. Google up $4. Intel up about 7 pennies right now. And before we went to break, we were taking a look at Amazon. So on days like yesterday, I like to be able to take a look at two things. One, I like to be able to take a look at patterns maybe that are completing on some light volume. There was a Tiger Garley that completed right around the 2:30 time frame that I got my clients into, and probably at about 3 o'clock or so, 3:10, the little thing took off. It was a rocket ship. It's up again this morning, if you will. But what I also like to identify is what is strong in the markets when there is a little bit of fear seeping back in. There wasn't a ton of fear yesterday, but when you have the markets trading down, what is trading up? And one of the stocks that I have had on my radar list has been Amazon. Why Amazon? Well, because of the hammer candle that was formed going all the way back here to December 14th when it made a low at the 170.25 mark. Now, you take a look at that candle, and you can only make a hammer candle on the way down, on the bottoms, and you want to be paying attention as to what is it that you're coming into on the left-hand side of the chart, and then what's going to start happening on the right-hand side of the chart. Now, if you go all the way back to the left-hand side of the chart, what you will see is you will see where Amazon had a break. It had a break going back to April 27th. I'll be able to read these here pretty soon. And it broke with 23 million shares. If you were going to go take a look at, where did it break from? Well, you could come all the way back down here into the April 19th area. So you had a nice break with some conviction up there. Certainly, you got to beware of what's going on because there was price destruction on October 26th, just simply from a marketing plan standpoint. But if you take a look at the ABC pattern, come off of the highs in Amazon from October 14th, down to that low that was put in on October 26th, all the way up to the high on November 14th, what do you have that completes at that hammer candle, folks? That's right. You got our A to B equals C to D at 172. The bottom of that hammer candle, folks, was the 170.25. It's so important, in my opinion, in my work, it's so important to understand the candle formation that is completing at the end of a pattern. Doesn't mean that, sometimes it doesn't mean diddly, if you will. But many times you're taking a look for some type of clue. When you are completing an A to B equals C, D pattern, and you've got a hammer candle, you need to, hammer candle, how about that? A hammer candle, folks, you need to respect it because that is one where, in this case here, as you're completing it, the bears had taken charge. But come during the day, intraday, the bulls stepped in. They pushed that candle. They pushed that price all the way to the top, and that formed that hammer candle. Now, there are 4 types of hammer candles. If you were one of my clients, you would know what those 4 are. You could go back and take a look at the webcast I do every other week. The last one we did, not this, it was last Wednesday, if you will, a week ago today. We took a look at those 4 different types of candle patterns and a trading system to be able to use on that. And I can tell you, in this trading system here, as I took a look at it, it worked out. It was beautiful. So what you want to do is, and so yesterday, the reason why I even bring this up is because you had Amazon up yesterday, trading up, one of the few stocks. You can see it's up right now at 185, just trading in this range here. I would not be biting on it. I wouldn't bite this apple, wouldn't bite this Amazon apple. But when this thing can move back down into maybe the 170, I'd say no 176, because you'd be looking at 176 trading up into the 195 area. I think you might have a good reward to risk. Folks, thanks so much for joining us. Tom and I will be up next. Then Basil Chapman, Larry Pesavento from 12 to 1, David White 3 to 4. Have a fantastic, wonderful Wednesday. See you in the morning, folks.